All right, we are live now. Yeah, we are live. Okay. So if you can hear me now, I want to see your comment in the comment section. I believe I should be able to hear you now. So just drop your comment in the comment section and then we'll proceed immediately. All right. So I'm waiting. I'm waiting. Good evening, guys. I celebrate you all for being here. Today is going to be an amazing section. So if you're active and you can hear me exactly, beautiful. Now I can see you. I celebrate you, sir. Welcome, sir. It's a smart, nice one, Augustine. I celebrate you. Welcome. This is what I wanted before. I think I made a mistake in my settings, and it's good to finally be able to see your comment. All right. So we'll be beginning in earnest, so we don't waste so much time. I don't want the session to be so much long, although this might be a bit long, but then just give me attention, and of course, it's going to be as simple as every time. Right. So today we're going to be talking about what? About beautiful Mr. Simon. Welcome, sir. I celebrate you. I celebrate you. Justice. All of now squad. Now don't show. Celebrate all of you. Welcome. Right. So now, like I said, today we're going to be talking about market trend. Right. Yesterday when we started, all of these things now they fall under the secondary market structure. Right. Remember, this is where you most likely observe the structures I'm teaching you now on the 4 hours, the 3 hours, downward. Let's say on the 4 hours, downward. Right? So I want to talk about the market trend. Right. So in this particular trend, you're going to learn how to identify trend using the trend line and the SMC. Now, what does SMC mean? SMC means smart money concept, right? I've always told people that I'm a hybrid trader. People always ask me, boss, do you use SMC as a strategy? Do you use? I know how to use all of them. So I just distilled and found the middle point. Okay, I picked the moral from here, picked the moral for here, and then I merged them together, and then I now formed my own strategy. So I want to teach you guys how to identify trend using both of them, right? So let us begin with the section right away. All right. So now, what are trends? A trending market is one in which price action is moving in a specific direction, either up or down. Remember, I told that the two major movements in the crypto market is either price is either going up or is going down. That is the two major movements. So whenever the market is going up now, it is described as a what? As a trend. Likewise, if the market is going down, it's also described as a trend. Now, this trend shows the flow of momentum at any given point in time on the chart. Of course, like I said, whenever the flow of momentum is favoring the upside, it's going to be visible on the chart. You're seeing green, the market is actually progressing upward. Likewise, when the market is progressing downward, it's showing the flow of momentum. So all of this thing is described as the trend. All right. So basically, price movement is represented either as a trend or in a ranging market. Like I said, the trend now is whether it's either going up or down. Now, when the market is not going up or down, the market is what we call a tight consolidation or a ranging market. That is when there's no visible market in the now. If you're to relate this with the primary structures, right? Now this tight ranging or consolidation is what we call either the accumulation or distribution, but on a lower scale, on a smaller scale, right? Because so that when the market is not, when there's no any significant movement to the upside or there's no significant movement to the downside, the market is said to be what? To be ranging. I don't know if you're following me. If you're following me, comment 111 as we progress. All right. So like I told you, the trend shows the overall flow of the momentum either upwards or downwards. All right. So now, yesterday we were talking about trend support and resistance, and then I told you that support and resistance is that region that whenever price gets to, price tends to come down. So it's more like a journey. The price is moving from the support to the resistance and from the resistance down to the support. It's more like a journey. Okay, amazing. I can see you, so I celebrate you. Amazing. All right. So well done. Yeah, great, nice one. I love the energy. All right. So now we're talking about what? Beautiful. I see all of you. And now the class is more engaging. This is what I wanted to see. Nice one. So now let's continue now, right? So like I told you guys, now whenever price is moving from the support to the resistance or the resistance to the support, it is moving in a journey, right? This is a textbook illustration. You guys have done all the assignment, and then you discover that this textbook illustration is slightly different from the real life experience. The textbook illustration is more like a perfect or a best case scenario. Then the reality is what you see on your chart, and that is why I gave you guys this assignment to go and do for me, right? But then this is how the market actually looks like. Okay, you can see it. That the market, at most I've seen, the market is moving from the support to the resistance. It does not just move up in a straight line. The market cannot just move from support to resistance. No, it's going to be going up in series of haphazard lines, zigzag. So now this is what describes the trend. All right, this is what describes the trend. For the market to move from point A, from the support, of course, for the market to move from the support to the resistance, it means the flow of momentum is representing the upside. The flow of momentum is facing the upside or is upwards. When the market is moving from the resistance to the support, the flow of momentum is downside. So like I said, now the initial slide I shared was more like a perfect scenario, but now this is almost like a reality of how the market actually moves, right? So this is exactly what we mean by a trend. All right, now we have two types of trend. We have basically the uptrend or the downtrend. This is exactly what I just said now. When the market is moving upward, it's an uptrend. When the market is moving downward, it's a downtrend. Okay, these are easy things to understand, but don't worry. I'm trying to simplify the knowledge so you don't get it. It doesn't make you don't get scared of this particular concept. Right. So let us progress now. Of course, you can see it here. You can see the uptrend. The way the market is progressing. It's series of. You can see the market is, as much as it is doing zigzag. It is progressing upward. It's a progressive movement. Right. You can also see the downtrend too. If you cannot see if you cannot see the structures very well, just tap on, you see a certain icon there, tap on that certain icon and change the quality of your YouTube. Change it to high, because normally your YouTube want to save your data, so it's going to reduce the quality to probably the medium or the low one. So if you want to now get maximum quality, change the view to high. I think so. I want the settings there, but you can change it there. So this is basically how a trend happens. Like I said, we only have two types of trend: uptrend or downtrend. And like I told you, the market does not just go up in a straight line. Just like I was giving you guys illustration with the car. If you want to move a car from Jos to Lagos, you cannot just go in a straight line. At some point, you need to press the car. When the car goes, it's going to reduce all of this, but it is progressing upward. All right. So the market is doing zigzag, up down, but up down is causing it to progress down upward. Likewise, the down, when the market is going down, it does not just go down in a straight line. It is progressing downward in a sequential manner. All right. So now I want to now teach you guys how to identify this trend, because the moment you can identify this trend now, but you can make money. This is where people make money from, being able to interpret the trend. Right? Because the moment you know when the market is going upward, you now capitalize or take a trading decision to favor the upward movement. When you know that the price is about to reverse from an uptrend to a downtrend, you now take a short. Right? So this is where it's very, very important to pay attention now. Because if you see, the moment you know how to interpret this market trend, right, you can, because that is where the money is, being able to interpret the movement of the chart. And since the trend line shows the movement now, if you understand the trend and then you understand how to interpret, or if you now understand how price action is going and how you can take advantage of it, right? So let us progress now. Now, part of a trending market. Okay, so I'm going to teach you guys the part of a trending market so that you guys will be able to. So now you can see the idea of all of this trend number is to help you to be able to make more meaning from the chart. Initially, we started from candlestick, we now gravitated to support and primary structures. Now we went to support and resistance. Now I'm not teaching you guys how to now make more meaning from the chart. Don't worry, you're going to see real life illustrations. So all of this is, of course, these are just theory. We'll definitely go into the practical section, right? So we have the uptrend and the downtrend. So for the uptrend now, the first part is what? The higher high. Don't worry, I'm going to show you guys practical illustration, right? We now have the higher low, we now have the retracement and the correction, right? So then on the downtrend, we have the lower low, we have the lower high, we have the retracement and the correction. If you're following me, please drop a fireball in the comment section as we progress. So these are the parts of the trending market. All right, so now part of an uptrend, now you can see it here now. Remember, I told you guys an uptrend is when the market is progressing what? Upward. Of course, the market doesn't just move in a straight line. The market goes in series of up, down, up, down. It is progressing upward, but it's going slightly. There's this slight movement of up, down, up, down, up, down, up, down. So now that up, down, up, down is what we call the higher high and the higher low, right? So you can see this textbook illustration now. This is more like, this is the market moving upward now. So whenever the market goes up small, it will create a higher high. See, it's normal English. Amazing. I can see the fireballs, right? Now, this is normal English. This is normal English, nice one. Okay, this is normal English. When I say higher high now, just look at it's normal English. High, waiting the high, then higher high. We say high, we pass high. I don't know if you understand. So when you say the market is advancing upward, the market is advancing upward by creating a series of higher high and higher lows. You can see that the market is advancing. Look at the first higher high. The market created the first higher high, then it created the next higher low. Then the next higher high was higher than the previous high. That's why we call it higher high. Then the next low was higher than the previous. That's why we call it was higher low. You can see the logic there. Higher high, higher low. So as the market keeps on producing higher high, higher low, it means the market is ascending upward. So that is what we mean by what? By an uptrend, right? Now let's go now. This is it here now. Don't worry, I'm going to show you guys this chart clearly now. This is not scared. This line I'm just trying to show you guys the higher high and the higher low. If you can tilt your screen just tilt your screens to the horizontal so that you can see this, and I'm showing you very well. You're going to see that these lines now, but each of these lines they point the higher high and the higher low. You can see that the market is actually advancing upward, but it was not advancing in the straight line. So these red arrows now, they are pointing on the higher highs. You can see how the market is progressing. Every higher high has its own higher low. Every higher high has its own higher low. Higher high, higher low, higher high, higher low. So far as the market is creating higher high and higher low, it is progressing in an uptrend. All right. So this is just I'm going to share it. I'm going to share this chart on the screen on the group chat, and then we're going to discuss about it so you guys can better have a feel of it. Okay. So let us progress now. Now we have part of a downtrend. Now, of course, I said the downtrend is made up of what? Of lower low. Of course, you see the market is ascending downward, so you need to be having what? Lower low, lower low. Means if this one is low, then the next low is lower than it. If this one is even in the downtrend too, the market is going to come down and go up small. But as they go up, the up will not be as high as the previous up. That's what you call what? Lower high. I don't know if you understand. Lower high. So the as much as it went up, you can see the market came down, created the first lower low, went up, created the next lower high, came down again to create the next lower low. So the next lower low would always be lower than the previous low. All right. So that's what I mean by what? By the part of the downtrend now. So let us progress now. All right, so you can see it here too. Like I said, tilt your screen. You're gonna see if you look very, you see a zigzag pattern. You see a zigzag pattern there. I did it too. I'm going to show you now. You remember I told you guys how to extract textbook illustration. So if you look at this chart very right, you're going to see where I put the zigzag pattern. Don't worry, I'm going to share it on the group chat. You see where I put you see a zigzag pattern on the candlesticks. Apart from this labeling the lower low and lower high. I don't know if you can see the zigzag pattern. Comment. I can. Let me see if you can see it. If you look at it carefully, there's a zigzag pattern. The market is coming down, it goes up small, come down, but it is ascending downward, it's cascading downward. If you can see the higher, if you can see the zigzag and the higher low and the lower highs, and if you can see the lower low and the lower highs, comment I can see. Let me know that I'm actually communicating with you. Although it might be a bit small here, but like I told you guys, I'm going to send you guys this particular sample so that you guys can have a feel of it. Okay, amazing. So you can see that this is how the market is going downward. As much you can see just by looking at it here, the market is actually going downward. But as the market, it does not just go down in a straight line. Like I told you guys, a car cannot just move from point A to point B without it will press the throttle small. At some point, it will reduce. This is how the market moves. The market is also, it will take a breather, right? The moment it reduce before it continue again. So that's what we mean by what? By higher highs and higher lows, right? So I love the energy today. Well, I love the energy, Divine. Well done. So let us progress now. Okay, so now retracement and corrections. Remember, I said the part of the trend. I said we have the higher highs for higher lows for uptrend, and we have the retracement. Also, if you look at now, retracement and correction, they are two common things. All right, they are two common. Every trend has a retracement and a correction. So I want you to look at the chart very right now. The retracement. What does it? Just by the name, see, I want you guys to be open-minded here. Just as the name implies, retracement. The market is coming back. Retracement. So you can see in the downtrend now. In the downtrend, the market will go up, to come down, go up and to come down. So that process of the market coming down is what we call the retracement. Then I'm going to show you guys practical illustration here, right? I'm going to just look at that line. Look at the line that the thing is coming down to touch. It's called that the market is bouncing. As it's bouncing, if the market is bouncing away from that arrow that is facing downward, is what is correction. When the market is coming back to the arrow, it's called what? Retracement. When the market is bouncing out, it's called correction. Whenever the market is coming back, it's called retracement, right? So this is what we call correction and retracement. Okay, so let us progress now. Now we have this one I just showed you guys now, but it's for the downtrend, right? Don't worry, all this is about. It's with time you'll understand it, right? But don't feel pressure if you're not getting it at this moment. You'll understand it as we progress. You can see the retracement and the correction, right? So now let us progress now. All right, we have the retracement, and now look at the retracement and the correction now for the uptrend. You can see now. Can you see the small arrows there? Whenever the market is going up, remember I said the market is going up and coming down, going up and coming down. As the market is going up, we call it the correction. When the market is coming down small, it's called the retracement. It will go correct, it will retrace, it will correct, it will retrace. So that's how the market moves. As the market is creating the higher high and higher low, it is correcting and retracing, So that's what we call the correction and the retracement. So understanding this part that would help you to make you become a better informed trader now. So I'm teaching you to make more meaning from the charts now. All right? Is this clear? If it's clear, please say it is clear. Even if it's not clear, you probably watch the video a second time and then you get it. But if you just get the concept, I want you to type yes. If it's clear, I want you to type yes, that it is clear, and then we would proceed. If it is clear, type yes, and we would proceed, right? So this is just what we mean by what? By correction and retracement, right? As the market is if the market is going to create the higher low or higher, lower low, lower high, lower low, it's going to be moving in a series of correction and retracement. So the way the market moves is retracement, correction, retracement, correction, retracement, correction, retracement, correction. All right? Amazing, Mr. Smart. Amazing, nice one. All right, so now let us progress, right? Amazing, Justice. Beautiful, nice one. I love the energy for tonight's class. Okay, so let us progress now. Okay, so how do you identify the trend? Now, there are different ways of identifying the trend, right? There are different means. And just like I gave guys the illustration, or was it you guys? Now, if that your central market in your village, you would agree with me that there are 1,001 ways to go to that market. right? There are different routes to go to the market. Even to go to Abuja, there are different routes to go to Abuja. It's not just one way. So even on interpreting the market trend now does not just obey one part. It's not just one particular way. That's why we say there's no holy grain. There's no one single way that is right. Right? There are different ways to approach the market. All you need to do is to know one particular road. If you know one particular road, stick to it and work with it. All right, just stick to it and work with it. So now we're going to be so the first one we have is what is the trend line, use of trend line. That's the retail concept. Then we also have the use of SMC concept. Okay, we also have the use of indicators. Now the only ones I use are the first two. That's number 1 and number 2. Right? I do not use indicators. It was before that days, but now I don't know. I use pure price action. So I'm going to teach you guys how to use number 1 and number 2 to identify your trend. Are we together now? So let's progress now. Now I want to teach you guys how to use a trend now, right? A trend line now. So what are trend line now? Trend lines are diagonal lines that show all the overall direction of the price movement of a crypto asset. It shows, just forget this big English. It shows the direction. We say market they go up, they show the direction, right? They provide a path, a way, a route for which price advance or decline. Now, if price want to move in an uptrend, just like going to your village now. Let me give it. Just like going to the market in your village now. You're going to agree to that there's a road. There's a road. Is that a main road or there's one corner, but there's a road to your village, right? So now you cannot just start walking inside bush or walking inside forest to go to your village. There's a road that you go to your market. So now that road now is that is a function of the trend line in the chart. Now the trend line is provide like a path, a route. Okay, the market wants to move from point A to point B. The trend line provides a path for which the market to be going on, right? The trend lines though are simple to draw, but can be very, very sophisticated. Yet people undervalue because of how easy it is to use. Mind you, in this training, I want to teach you guys how to use this, how to use the most simplest way to approach the market. I'm not trying to overcomplicate things for you guys here, but a lot of people want to overcomplicate things, and that is why they'll keep on showing you a lot of things. But I want to show you that the most simple things so that you can get the most results. All right, so let us progress now. Of course, we already explained how you can see the market is moving from point A to point B, from up, down, up, down. This is how the market is moving now. Let me show you how you can use a trend line to make more meaning from the chart. Now look at the uptrend now. Can you see the green? If you can see the green line, there comments green. If you can see the green line, you can see the green line now. The green line is like a path, it's a way. If the market they go up, it go surely come down. It's more like it's providing the route. Whenever the market is going up, it will come back and lap on the trend line before it continues going up. So the trend line provides a route. If you can see the type green, if you can see it. Okay, so that's the work of the trend. You can see how the trend. You can see normally now. If you are to go back to, if I say you should go back now. Now, if I say you should go back now, right? Just with your mere eyes, you might not be able to see this. Mind you, this is a textbook illustration. Of course, I'm going to give you guys the realistic illustration. We're going to do this in practicals. But this is also to understand the concept. You can see here, you might not be able to make so much meaning. Okay, amazing. I can see the response. Amazing. All right. So from just looking at this chapter, you might not be able to make meaning from it because of it's just this is just some random structures now. But you can see that the moment we went into the use of trend, you can see how the trend has made the meaning, has made the chart to have more meaning. Right now, if you're looking at the chart, you're not just looking at it like some random structures now. There's a way you can define the movement of the chart. So this is exactly what a trend line does for you. Okay, so this is, you can see the downtrend. The one we did before was you can see the red line now is a downtrend. When the market is approaching, even as the market they go up, you get road you go follow. If the market they come down, you get road you go follow. So this road are what we call that. The trend line helps to provide the road. All right, so I'm going to teach you guys how to apply the trend. Don't worry, I'm going to teach you guys how to apply it. Now, yeah, you know, the idea of trading is to gather as much confidence as you know. We've already talked about candlesticks. We've already talked about support and resistance. Now we're talking about trend line. Don't worry, it's a point to come where I'm going to teach you guys how to combine all of them. The idea is just like you want to cook soup now. If your parent taught you how to cook food now, they taught you the function of Maggi first, taught you the function of ogbono, taught you the function of fish, then at the end of the day, now taught you how to mix them. And even in mix them, you do not just go and pour them in the pot like that. There's a process, right? So, but then the first step is knowing the function of this individual ingredient. So now, just like now, we want to cook you to become a technical analyst now. So these are the various ingredients I'm bringing now. Then along there, I want to teach you guys, okay, this is how you apply it, this is how you apply here, right? So this is how we use the trend now, right? So of course, this is more like a realistic illustration, but of course, I'm going to give you guys better illustration on the group chart. So let us progress. Okay. Now, how do we draw our trend line now? Number one. Now, remember, I'm just teaching you guys how to use a trend line to identify your trend. Remember, we're still going to talk about how to use the SMC concept, the smart money concept. Okay. So in this particular case, we have number one, identify your support and your resistance. Now, if you're very, very sensitive, you discover that now I'm beginning to teach you how to cook a soup. Remember, I said first of all, you're going to learn about the function of certain ingredients before you now learn how to combine them. So in this particular case, now I'm teaching you the functions. I've already taught you the function of support and resistance. Now you can see now that I'm not saying how to draw a trend line. I'm saying support and resistance. So it means that you just like say you want to cook indomie, you go first boil water. So now support and resistance, it's not like the water you're boiling to be able to cook a better analysis. This my if you're getting Rema, type chef. I'm not a chef. Comment chef or drop some fireballs to let me know that you're getting the Rema. Let you know that I'm confused with my illustrations now. Like I said, so I want to cook you to become a technical analyst. So I've taught you the function of your first ingredient, which is your support. No, it's your candlestick self. But let's just leave the candlestick first. That one is like the salt and everything. Then I taught you how to boil water now. So boiling water now is the support and resistance. And so I want to now go into learning how to do the next thing, probably to prepare your bono. If you can relate to that, please, chef, just comment chef. Let me know that you're with me, and then we'll proceed. Right? I can see the energy in the group chat. It's amazing. Divine, blessed Divine, you like food very well. Nice one. I celebrate you, sir. Right? So I'm glad that you are following. Okay. So let's proceed. Right? Let's proceed now. Okay. So number 2, identify your key areas of value. Don't worry, I'm going to explain to you guys what my guy said. Chip Opera. Don't worry, man. We are together in this. All right. So now we said identify your areas of value. I'm going to teach you guys what areas of value is. Okay. Then when I say connect at least 2 areas of value using your trendline tools. Now this is just English. Let me show you guys practicals. Number 1, identify your support and resistance. Of course, we all here must have known how to identify support and resistance. Let's say you've identified your support and your resistance now. This is it here. I've identified my support and my resistance. And then I know that the price is at my resistance. Now, sorry, the price is at my support now. I am not going to just go and enter the trade because the price is at my support. You cannot just go and start cooking. You cannot just go and boil water and then because of the water I've boiled, you now go and carry it and start eating about water. It doesn't make sense. Right? So as much as you can identify, it's not advisable to use just your support and your resistance as a confluence. So after you've identified your support and resistance, the next thing you need to do in order for you to use the trend line is to identify your areas of value. Now, what is areas of value? Now, areas of value is that area. Now, whenever there's a reversal, maybe if price they go up and then there's an immediate reversal, we call that area an area of value. So look at the place I mark. If you can see the circle there, you can see that that place I put circle there, the price was initially coming down and then there was a sharp reversal. That's what we call an area of value. Likewise, when the market is going up, right? Look at the market actually started from the support. It was going up in a reverse. That place that there's a sharp reversal is what we call it the area of value. As we progress, you're going to learn it. You're going to learn it as what we call the demand or the supply zone. But for now, have it at the back of your mind that they are called areas of values. Anywhere that the market reverse, we call them the areas of values. So the moment the market has touched your support, you are not expected to just enter the trade like that because it's risky. Right? You need to have extra confirmation that the market is going to move from the support to the resistance. Remember, we said that it's a journey. The market wants to move from point A to point B now, right? But as much as the market has got to the support, you need to wait for more confluences. So I'm trying to teach you how to use a trend line to get more confluences. Okay, so you can see we've gotten at least 2 areas of value. Then the next point is connect these areas of value. You can see how I've used my trend line to connect the area of value. So now I now have an expectation, I now have a realistic expectation of where to enter the trade. Now, somebody that does not know about, you can see now that the market has corrected. If you follow what I meant by when I was teaching about correction and retracement, this is an uptrend that is forming, right? The market has corrected now. Somebody that does not know about retracement now will go and buy the market here. As much as you can buy the market can still go up. It's not a good place to buy because your knowledge will teach that the market will retrace. As the market is retracing, the market is retracing to touch the trend line. So now you're going to wait for the market to come back to the trend line before you buy. It's giving you giving you a better buying position. Man, the trading, but you might not appreciate this number until you now begin to go further into other concepts. That's when I begin to give you a lot of ingredients to cook the soup. That's why you go, oh boy, this food sweet oh. But for now, just have it at the back of your mind that you're not supposed to use any of them in isolation. Even these 2 things, you cannot just use hot water and pure ogbono to cook food. So the fact I've given you, as much as those are the main ingredients, they're not just enough. So we need to go add other spices too. All right. So this is it now. You can see how now we now have a realistic expectation of where to go and wait for price to go. So we're not going to enter now. Someone that does not know about this now will go and enter the trade, but we know that the market will retrace. So the market is going to retrace. As after the market has retraced, that we're going to buy. And of course, if the market is going to retrace and touch the trend line. All right. So let us progress now, right? Of course, you can see an illustration. You can see how the market is cascading downward. And you can see how my areas of value, the market is just coming down, tapping. And this is what we mean by a trend, right? So let us progress. Okay. Now, key pointers when using a trend line. Mind you, we're still talking about how to use a trend line. Don't worry, in the group chat, I'll stretch your mind with engage. I'll stretch your mind so you'll be able to understand these things very, very well. Number 1, do not force it. These things that to English no go permit you to explain now. But to get to a point I want to draw your because I said she used at least 2 areas of value. You will see person you go the trend line is a straight line. You cannot bend it, right? So make sure that you pick only your valid areas of values, your key areas of values. Do not because don't try to force. Don't try to say, "Kai, I see one area of value here." Just use obvious key areas of value. So don't force it. Number two, don't fall in love with your trend line. Just as we talked about support and resistance, I say support can flip to the resistance, and resistance can flip to the support. So if you fall in love with your trend line, it will disappoint you. So as much as because sometimes you can draw a trend line to be so sweet. Oh, but this market is respecting the trend line. You now fall in love with it, but don't fall in love with it. Oh, it can break at any moment, right? Just be open-minded. Then number three, higher time frames trend lines are more reliable. Of course, when we begin to talk about multiple time frame analysis, I'm going to teach you guys what I mean by this particular statement here. So when you identify your trend on the higher time frame, it is much more stronger, right? It is much more stronger. Okay. Then they say trend lines are not 100% as seen in books. Be flexible with your imagination. Like I told you guys now, don't worry, I'm going to show you guys practical illustration when we go on the group chat now. You know, when I say trend line, it go to bounce for the trend, it go to bounce for the trend. Like, oh boy, say it go to see, not be every time it go to bounce for the trend. This is the shortcut. This is the should I call it the disadvantage of using trend line now? You not always get a perfect example, and that's why I want to teach you guys how to identify the trend using SMC concept, because SMC concept will give you a better explanation of the market trend. Right? Then number four, never trade against the trend. Or number five, right? So if the market is going upward now, always look for buying opportunity. Nobody say the market they go up now, you go look for a selling opportunity. You will ricket. Except if the market has got to the resistance and then you find other reactions, fine. But if the market is clearly in an uptrend, please do not trade against the trend. Because ideally you're supposed to trade in favor of the trend. It's not be like say you're a fisher, you swim, then ocean, you now saw a tide wave. You cannot swim against the wave. It will consume you, right? So let's make sure that you swim along the trend. So don't trade against the trend. If the market is going up, trade up. If the market is going down, trade down. Okay? Practice increase your accuracy and speed of identifying the trend line. I don't hammer. Even this morning, now our sermon be that we began to hammer on why you should practice. So you see the structures, but just like I told you guys, to go to Abuja, no matter as you smart, you cannot use one day, maybe from Lokoja, from Jos to Abuja. No matter as you're smart, you cannot just move one day and know the road. Even if you have the fastest car, you need to go the road at least if you're smart, at least 2 to 3 times, then you go know the road. Then if you're like us that our brain is a bit one car, then you need that like 10 times before you know the road. So now that 10 times now that's more like practicing. So when I begin to identify for a trend, see, you know, if you understand that you know practice, right? So practice your way to mastery. Like I always say, there's a lot of things that can put you by mistake. If you work out for it, if you pick money for ground, but mastery is the last thing you'd ever pick by chance. You can never get mastery on the plateau of chance. Okay, so let us progress now. Now, I want to go into how to use the system. Sorry, I'm rushing. I don't want this training to exceed 35 minutes. Okay, but I hope you guys understood how to use the trainer. If you understood it, just drop some fireballs in the comment section. Amazing. Ah, my guy, I celebrate you, sir. Mr. Solomon, so Justice, I celebrate all of you. Divine. Please, if you relate to how to use a trend line, I want you to drop a comment section. Although I'm not really expecting 100% response now, yeah, because so some of you might be a new experience, but then as you begin to practice, to distill into your head, okay? My guy, I celebrate you, sir. That's just the key. Practice. So practice your way to the top. Practice. Like me, if I do work out, see, sometimes I can work out, I'll put my headphone. If I'm in a quiet area that I know say Kike no go jam me, I will just put my headphone. I go look my chat. Because it's like I want it to be part, because see, the moment it begins to pay you back, you forget all of those days of struggle. Right? Amazing. That is awesome. Right? So now let's progress. Now, thank God you guys are with me now. So now, how to use the SMC to identify the trend? Remember, I told you guys that the SMC fills up for the inefficiency of the trend line. Remember, I told you that the trend line now, if you look at the illustration we're doing for, it was more like a perfect scenario. No, textbook illustration are always a perfect scenario. The market will be trend, you go to bounce. That is the perfect scenario. When you go on the chart, it's a different ballgame entirely. But the moment you understand SMC concept, to be able to where the trend line is malfunctioning or where the trend line is inefficient, you cannot supplement the knowledge by the use of SMC concept. Okay, so now SMC traders tend to define trend whenever there's a break of previous high. Now this is just English. Break of previous high in an uptrend. What's an uptrend? An uptrend is when the market is going higher high, higher low. Of course, we talked about the part of an uptrend. Higher high, higher low, higher high, higher low. So when a new higher high is about to be created, for SMC traders, they call it a break of structure. An uptrend is forming. right? So when there's a break of a previous high in an uptrend, or when there's a break of the previous low in a downtrend, they've called it what? A break of structure. So for them, now that is how they identify their trend. This is big English. Don't worry, you will understand it as you progress. So the break of the high or lows is called the break of structure. The big English. Just take me, you're going to understand it. A practical illustration now. This is a clear example of what? Of an uptrend now. So you can see this particular case, I didn't use a trend line. Man, now zoom your chart better. Look at, you see something I wrote BOS. Now, I want you guys now, if you've learned, maybe if you've not yet mastered that higher highs, higher lows, maybe you go and do it. So you now come back and watch this video now. You can see that whenever a new higher is about to be created, I put a break of structure there. That's from the previous high. Once the previous high once the market pass the previous high, we call it the break. Once it break once it pass the previous high, because a break of structure has happened. Okay, so this is, you can see now that when the market is creating a new higher high and higher low. Now what also called the break of structure. The market is moving upward. So this is how the SMC traders what. Don't worry, when we go on the chat, on the group chat, we're going to have more interaction. Then you see how this is practically applied. So you can see the market actually advancing upward, but then they don't use trend lines. So you might see their own chart. Do not use trend lines. They'll just use the what? These lines. It's still the same thing. When a new higher high is created, of course, look at it. The higher low is still maintained. Like the market is still creating lower low. But when the market is creating lower low, and then there's a break of structure, then that's what we call it. So this is how they identify their own trend. Okay. Let us continue now. Now I want you to zoom on this chart very. Now I want to show you guys how the SMC traders, how they work. Zoom on this chart. You see one green line. You see one green line. So this is the market advancing upward. You can see the first green line there. You can see the first green. The market went up. It now came down to create the higher low. Then when the market go up, it now passed the previous low and now put that line there to indicate a break of structure. So an SMC trader will begin to say, the market is about to begin. Is the market don't they go up? Right now, look at when the market passed the first one, it created the next higher high. Then the market came down to create the higher low. As the market was going up, as it passed the last higher high and then created a break of structure. So that's all. So if can you see the small green lines? If you can see it, just comment green. Let me know you can see it. All right. Comment green, let me know you can see it. If you can see the small green line. So that's what we call it, the break of structure. Don't worry, go and watch this video again and again and again. And the group chat would scatter practice. Trading view go hot today. The app will hot today because we practice. Right? So you can see that's what we call it, the break of structure. So you can see here, they didn't use a trend line. Of course, a trend line can actually work here, right? But then that is not that's not the SMC concern. The SMC concern is that they are looking for what? For break of structure. That's all they are looking for. So if you can see the green line, amazing, right? So that's what we call it, what? The break of structure there. The market is advancing upward. Okay. Now let us progress. Like I said, now if you're not getting this now, don't feel panic now. Like I told, this is a new information now. Watch it again on the group chat there, but we'll wrestle that spirit of I don't understand. You must understand. Okay, so this is how the market moves now. Now pay attention. Now I want you to pay attention to this particular chart now, and then the next slide I'm going to share now. Now look at the next slide now. Look at where the I put arrow there now. If I tell some people, if you go on the group chat now, this is the same chart to the one I shared before. Look at 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 where the break of structure is. In an uptrend, the break of structure is happening at the upside. Look at it. In an uptrend, the break of structure is only when a higher high is created that we have a break of structure in an uptrend. Because I know that if I give assignment now, some people do for me this thing. So where some people now going to put their break of structure below like this. This is not it. So this is a wrong BOS. I encountered this mistake to be occurring is always occurring in every class I hold. When I say that the one I'm going picking nothing concerned with the bottom. All you're concerned about is the higher highs. When the new higher high is created, it's a sign that the market is progressing upward. So please, when I say don't do this thing for me, I beg. Okay? So let us progress next one. So now, like I said, for a downtrend now, is when a new lower low is created, then a downtrend has been created. So you can see the break of structure, they say the same thing. This is better, easy to understand, but when we go on the group chat, we're going to have more in-depth discussion, right? So you can see how the market is creating the break of structure for the downside. So the moment the new lower low, of course, break of structure, once a lower low is broken, it means the market they go down. As the lower low they break of structure. So from the tip of the last low, once it passes it, break of structure don't happen. Even if it's just a week that passes it, break of structure don't happen. Okay, so now let's progress now. Now this is it here. So break of structure in the downtrend. You can see this is the downtrend. You can see the market is castigating downward now. Now look at it now. In an uptrend, the break of the tool I used was up, because it was we're looking for the higher high. But this particular case, we're looking for the lower low. Now in the downtrend, your focus is more on the lower low. On an uptrend, your focus on the higher high. So you can see the break of structure too. You can see the break of structure. So the moment the market is cascading downward, you call it what? A break of structure. Okay, so this is more like a what? I'm giving you guys a pictorial illustration of how it happens. Okay, so this is how it happens on it. This is not easy to understand, right? I'm not going to say much about it. It is practice that will help you to understand it better. Don't worry, it's going to be easy for you to understand. Okay, so this brings us to the end of tonight's section. Okay, like I said, now look at it here now. Now this is a wrong way of identifying BOS in a downtrend. If I tell them, okay, give me a BOS now, they will not go and start. If I tell them to give me a BOS on the downtrend now, you're not going to start giving me this thing now. No, see, you're not supposed to give me this thing, because it's not a BOS for me. Remember, for a downtrend, you're more focused on the lower low. Nothing concerned with the upside. We'll get to a point where you need to be worried about the upside. But for now, when a BOS is happening, it's the downside you focus on, not the upside. So this is not how to draw a BOS. If you look at now, it looks like the downtrend. It looks like the other thing. It looks very similar. If you're not careful, you're not going to understand it. Okay, so this brings us to the end of tonight's section, guys. I like I said, I don't want this session to be long. That's why I'm just blowing the go. So listen to the thing again. YouTube has a way of reducing the speed. I talk too fast. It reduces the speed of my voice. Okay, and of course you can always visit Renatio on YouTube or visit Baby Pips to learn more about trends. Opera cannot be a monopoly of knowledge. Learn from other sources. I always told my students that they should say no to dependent learning. Don't be dependent on me to give you knowledge. Yes, I've given you guys a blueprint. What I give you guys is actually enough in a way. But see, if you want to develop that mastery, but take responsibility. Be aggressive about learning. Take responsibility for your learning and see how you skyrocket. Right. So this brings us to the end of the section. If you enjoyed the session and then you know you got value, even if you don't understand that, but you got value, comments. Just drop a fireball. Let me know that you got value. Just drop a fireball and we'll call it a day for today. All right. So drop some fireball. Simon, how far? Are you still there around? I celebrate you, sir. Well done, boss. If you know you got value, just drop some fireballs in the comment section, and that will be the end of tonight's section. All right. So I'm waiting. Let me see some fireballs, and then we'll call it a day. Let me just give you guys a shout out. Mr. Augustine, shout out, sir. I celebrate you, boss. Well done, sir. No worry. That spirit of I don't understand. We'll bind it today. You must understand by fire, by force. That's my promise to you guys. I'm going to make sure that I give you guys maximum time so you guys can understand this stuff, right? Hey, nobody follow. Okay, amazing. The other ones don't sleep. They're not more responding again. Well, that is just the end of the section. I'm glad that we had a full house today. Would continue tomorrow. All right. So see you guys later.